We have the jobs report on Friday, which means this week will be a relatively slow data week. The first week after the jobs report usually is the second week of a month. Today, the markets can cue off comments from San Fran President Mary Daly, Atlanta Fed President Ralph Bostic, and Cleveland Fed President Loretta Mester. They'll be talking about the economy off and on today. Looking for headlines or comments that might reveal what the Fed's thinking for their July 25th and 26th meeting. Right now, markets are expecting the Fed to raise rates 25 basis points. That takes the federal funds rate up to 5.5%. This afternoon at 3 p.m., we get a look at how indebted the consumer is with the release of the May consumer credit levels. It's not going to be good. Debt is what's moving the economy right now. Credit card debt, housing debt, auto debt. Tuesday, we have St. Louis Fed President James Bullard speaking. Wednesday, we get mortgage applications from the MBA for the week ending July 7th. We'll check on housing, see where the average 30-year mortgage rate is and how refis are doing. On Wednesday, all eyes will be on the June Consumer Price Index, the CPI. Markets expecting an increase of 0.3% with year-over-year price increase of 3.1%, better than the past several months, but still not at the Fed's target. It reveals that the Fed still has more work to do on inflation if those numbers are realized. Also on Wednesday, we have Minneapolis Fed President Neil Kashkari speaking, and again, Cleveland Fed President Loretta Mester. Thursday, as always, we get initial unemployment claims for the week ending July 8th. All eyes will be on the PPI data, the Producer Price Index, see where wholesale inflation is. Markets expect a headline increase of 0.2% with a year-over-year rate of 0.4%. That's good. We've seen the inflationary pressures coming off on the producer side for several months now. We just need to see that transfer to the consumer side. Also on Thursday afternoon, we get the June Fed balance sheet. That should show the Fed still has about an $8.4 trillion balance sheet, way too high. The Fed has been threatening to reduce that balance sheet for many years now. They have failed in doing so. This is part of the problem with inflation, is this balance sheet. Of course, what paused the Fed most recently was the banking crisis when the Fed created another liquidity provision for banks to keep from going out of business, to keep from losing customers' deposits. And on Thursday, we get FOMC member Christopher Waller speaking. On Friday, we have the export and import price indexes, see how inflation is with respect to cross-border transactions. And we get our first look at the July University of Michigan Consumer Sentiment Index. All right, quick look at markets. The S&P 500 remains near the highs for the year at 4,401. Watch 4,450 above and 4,328 below. The U.S. 10-year is at the year's highs of 4.052%. Watch 4.15% above and 3.87% below. Checking on oil, West Texas Intermediate crude on the NYMEX is trading at 73.66 off the yearly lows of 67.64. Watch 76.80 above and 70 below. The U.S. dollar index is at 102.27 off the yearly lows of 101.01 and well off the highs of 105.66. Watch 103.25 above and 101.59 below. And lastly, checking on gold. Gold is trading at 1,927.90, about midway between the year's high of 2,055 and the low 1818. Watch 1,943 above and 1,890 below.